The U.S. authorities plan to ease restrictions imposed to combat the coronavirus spread. This intention had a short-term influence on the market sentiment. Moreover, it's obvious that it's too early to relax the U.S. lockdown. At the moment, the number of infected people is unchanged. However, it's far from reducing. Under the current conditions, oil prices are still dropping and the demand for safe haven assets is climbing. In our video review, we will find out what macroeconomic data will be revealed early this week and how it may influence traders' sentiment. According to the technical analysts, the Australian dollar is likely to lose ground. On Tuesday, the Reserve Bank of Australia is expected to publish the monetary policy meeting minutes. The document may contain a hint that the regulator is planning to lower the key interest rate and its economic forecasts. Such news could trigger a decline in the Australian dollar. A bit later, Reserve Bank of Australia Governor Philip Lowe will provide a speech. Mr. Lowe is likely to pay close attention to Australia's business activity and the IMF's forecasts that showed the country's economic downturn by 6.5% by the end of the year. Of course, markets will expect some stimulating measures. In this case, the regulator may offer a 0% interest rate of the asset purchasing program, but both variants will have a negative impact on the Australian national currency. Besides, on Tuesday, the UK is expected to publish its claimant count data that will reflect the coronavirus impact on the country's labor market. Economists suppose that the number of unemployed people may jump. Judging by the United States labor market situation, the figures could significantly exceed the predictions. The pound-dollar pair may decrease amid this data. On Wednesday, the UK will disclose its Consumer Price Index report. After the publication of the data, the pound sterling is likely to test support levels. According to the forecast in March, the UK consumer prices will remain unchanged. Thus, the annual inflation rate could slow down to 1.5%. At the same time, the key interest rate is at the level of 4.10%. Canada is also expected to unveil its Consumer Price Index data on Wednesday. Economists foresee a positive rise. The Consumer Price Index may advance by 0.4% on a monthly basis and by 2.1% on a yearly basis. However, the real figures could be significantly below the forecast. This, in turn, may lead to the Canadian dollar sell-off. On top of the above-mentioned events, traders will also pay attention to the publication of the following statistics. On Tuesday, the ZEF Institute will disclose the April Economic Sentiment Report for Germany and the Eurozone. Canada is expected to reveal its retail sales figures, and the United States will report on its existing home sales. Moreover, on Wednesday, the U.S. crude oil inventories figures may also influence traders' sentiment. You are watching Forex Trader Calendar on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals.